Welcome back to the Traders Network. I'm Michael Yorba, your host. Thanks for joining us. Broadcasting to you from the Dallas KFXR 1190 AM Clear Channel Studios and streaming to you live from yorbamedia.com. Here's Nick Santiago. Gentleman's been with us since the beginning of the show and has been knocking it out of the park ever since actually before we met, but ever since we met on our show. All right, Nick, what do you got for us? How you doing, buddy?
Hey, pal. How are you, Michael?
I'm hanging in there, man.
All right. We got the Shanghai Composite. I wanted to talk a little bit about that today. It's something that we really don't bring up much. We normally just talk about individual stocks, but I think this is pretty important, the way this thing is breaking down. This is something I told my members to watch for throughout 2014, even last year. Mm-hmm. And right now, they're China, as you know, basically everything we buy here in the United States is made over there. So there's going to be repercussions and problems with this Chinese market breakdown. They have a subprime crisis called shadow banking. They have corporate defaults that are now taking place. Last night, the index was down about 1.5%, and I think this is going to break down. So I would be careful of all the Chinese ADRs that you own. It doesn't really matter which ones they are. They're all, if China starts to break down here, all of your Chinese ADRs that were high flyers, you really got to be very, very careful going forward.
Well, I'm looking at it. You're talking about the $ SSEC, right?
Yes.
Okay. I see 5 lows that have been protected here. Are you saying that this could be the one that breaks it? Because if it does, it's going to be a whole new world over there.
This should be the one that breaks.
Oh, wow.
This should be the one that breaks. You're going to go through that 1950 level like a hot knife through butter. This will go test 1850, 1800 pretty easily. And I think there's even more downside after that. So I think traders got to be aware of this. And if you're looking at, looking to buy emerging markets or anything like that, or the FXI, you don't want it at this time.
All right. Well, here's the $1 trillion question. When that occurs, do you see that as a ripple effect coming back here to our markets, or scared money running out of that coming to our markets?
Well, the problem, what's been going on recently is that their money has already been coming into our market.
Okay.
So now, once the fear hits, though, the money will stop coming in here, and you're going to see a decline in our markets as well.
So that's what I was wondering. It's going to be a negative effect over here as well.
Yes.
Okay. All right. Let's move on to the rest of the equities that we're going to talk about that are on the list for today, and then I want to round up with your scenario on J.P. Morgan and the S&P markets.
Sure. Well, the next one on my list here was Baidu, and Baidu is probably the most popular Chinese ADR out of all of them in existence. This is basically the Google of China, and right now the stock's trading at $157.59. You'll see that it peaked out from its all-time high on March 7th, and it has not been able to catch a bid with the U.S. stock markets, and this is just confirming everything that I'm looking at in China. Mm-hmm. My downside target on Baidu now is $127. So that's a pretty steep fall. Today it's trading at $157.57. But there's a lot more pain coming in this China trade.
Now, I'm getting the feeling that you're setting yourselves up just to short the rallies on a lot of stocks. So there's some big room that you're talking about here.
Yes. Yeah, we're already we've already been shorting for the last 2 weeks. Mm-hmm. We've been in and out of a few things, but the bigger declines are on their way.
That's what I'm talking about. Okay, so we're talking, like I just was talking to Tim on the other segment, and I'm getting the feeling from you, wave 3 is about to hit.
Well, I don't even think we've even seen wave 1.
Oh my gosh! Okay, that's a statement and a half. Uh-oh. That's a big amplitude change here that we're talking about.
Yeah, I mean this is I mean even the bounce up today that's happening. Yeah. This is led by the Dow Jones Industrial Average. Take a look at the Russell 2000.
Right.
I mean that's not even up 0.2%. The Nasdaq Composite, I mean that is up 0.2%. So this is all options X game playing, because you have a big quadruple witching coming up tomorrow, which means you have 4 different categories expiring. Everything under the sun, in essence, is expiring tomorrow. So this is all options X game playing by the institutions. And, I think traders need to brace themselves for further downside in the major stock indexes going forward.
Okay. All right. Well, we'll come back to that. But let me see here. What do we have now? FDX, right?
Yeah, let's take a look at FedEx. Mm-hmm. FedEx hit my level yesterday. They reported earnings. Again, they missed on every metric. Traders could get short FedEx right now, put a stop above yesterday's high. which was basically 141.17. But this FedEx should head down to 125 and then ultimately lower. I don't see any real reason to own FedEx at this stage of the game.
Mm-hmm. I see that. I'm looking at the transportations index too. Also, it looks a little bearish, a little hammer going on there.
I'll tell you what, Michael. Take a look at a weekly chart. I know the listeners can't really see this, but what you're going to see here is that you had a big decline the week of January 20th, 2014.
Is this FedEx or the transportations?
This is FedEx.
Okay, let me get it. Go ahead.
Which is the most important transport stock there is.
Right.
You're going to see a big decline on the week of January 20th, 2014.
Yep.
And we're just stair-stepping right into that level or that red bar high, and that usually leads to a catastrophe to the downside.
Okay. Give me a catastrophe number you're thinking about.
I think 125 conservatively, and then after that down to 112.
Okay. Over what period, that 112 number?
We'll see it over the next 3 months.
Okay. All right. Well, that's pretty easy. I mean, you've got to go out, write some options against that, and also if you got the wherewithal, you can short this thing.
Buy puts on it too right now as well. And I think that's another way traders could play it if they don't want a big outlay.
Okay. All right. What about Amazon?
Amazon's another stock. I mean, the stock's down $5 today. If you see the chart here, this is an ugly chart. This stock wants to go down to around 310, possibly even 300. Mm-hmm. I think traders could get short right here. The only problem with getting short right here is that you've got to use a stop loss of around 406 on a weekly chart close. So that's the only negative. You're going to have a big stop in there, but ultimately, this is another stock that looks like it's topped out to me, and it's headed a lot lower. Okay, so transportation's bad, Asia bad, tech, right? Bad. Certain tech, yeah. Certain tech, okay, and then all right, Twitter, social network. Twitter's been the high flyer of 2014. TWTR is the ticker symbol. On your show back, I guess it was in early 2014. I said, watch this thing go to 50. It got a nice bounce. It bounced back up to 58. Now it's retesting 50. But the second time around, we don't want it. So we're going to look at Twitter around 46.50. This should go lower. Right now it's trading at $50.26. But there's no reason to own Twitter here. Let it go down to around 46.50. That's where you can pick it up for another bounce. Okay. All right. Excuse me. Let's go back to J.P. Morgan and let's see what the financials are telling you. Yeah, J.P. Morgan's having a power move today. Stock's up on volume, and it's a big move. Traded all the way up to $60.50. Yesterday's close was around $58.60. So the stock's up big today. But here's the deal with this, Michael. Yeah. It's up on the fact that bond yields have been rising. Mm-hmm. And you could see the other leading financials that get free money, like Wells Fargo, Citigroup, also Bank of America, all having a similar type move today. But yields are not going to go up that much. They're going to go to around 2 point on a 10-year bond yield. Where the 10-year U.S. Treasury note yield is going to probably trade to around 2.83, 2.85, and then it's going to start declining. And when that starts to decline, these banks are going to decline. So don't buy into this move in the bank stocks today. It's a sucker's rally. Okay. All right. Now, let's get back where we started with the S&P because that was a good conversation. What your thoughts are, time, amplitude, and, let's just stop there. That's enough for now. Time we're within the time zone of a market fall. So I think traders right now, unless this market makes a blast-off move above 190 on the spiders or 1900 on the S&P cash, I mean, we're on borrowed time. I think the market is setting up to go lower. It could happen very quickly, and it probably will happen over the next couple of weeks. Okay. All right. Are you looking at any other markets as some kind of a tip-off as to what's going to happen next? Like some people look at copper and say, this has been a massive pullback, and some people don't. Is there any? I mean, we got to go here real quick, but is there any other markets that our audience can say, oh, there is a good tip-off? Well, the tip-off for me is that you're starting to see housing roll over, and housing has been really the strength of this market, basically since October 2012, and now housing is going downtown. And when that move rolls over, business in America slows down, and that was the rally from 2002 to 2007. It was all housing-based. The rally from 2012 to late last year was all housing based, and now that trade is over. So, I mean, the economy is going to slow down. Everything's going to slow down. 2014 is going to have a lot of volatility in it.
Got it. All right, please contact for you so that everybody can get in that trading room with you and pull the right trigger.
Yeah, come on over to InTheMoneyStocks.com. I mean, you can take a 7-day free trial to our research center, or come over to our trading room, where you'll see everything that we do each and every trading day.
All right, keep up the good work, Nick. Thank you so much.
I will, Michael. Have a great day.
You too, Nick Santiago, President, CEO, InTheMoneyStocks.com. We're going to